Recording. Right, let me just share my screen now. So chart up. All right. Let's start off with. I think I went over this with both of you, but um the only thing that's missing from this setup is momentum. So, oh, I hate when this lags, man. Have you seen this lag? All right. The only thing that's missing from this setup is momentum. Essentially, we have a. Let me just take everything off the screen and go over this. So obviously, long term, this is this is on a nice bullish trend. I don't really see anything. All this price action looks pretty filled in, so I don't see anything that's like worthy of price coming in to fill in except for this here. So obviously, this is on the higher time frame. Identified my point of interest. So we had this inefficiency here, right? This is the fill. I'm not gonna mark it out with a fib because the fill is like what I'm kind of looking for. So obviously in your is someone joining? Nah. So obviously in your own time you can obviously do your top down, but to save some time, let's go to the 10 minute. Again, I'm pretty sure I went over this with some of you, but there's some in the chat who I haven't, so it's kind of for them. So the 4 hour inefficiency lines up with this 10 minute inefficiency, which is like spot on, literally the same price level. So we got time frame confluence here. It also lines up with a previous market structure over here. Literally again to the T. What else? We already came into some form of discount. If we look at this swing here, but I'm looking for this to come a bit deeper into like our 786, 71 level before going up. We also got, so if we zoom in here into this region here. By the way, is it like really lagging for you guys? Let me just try to close some apps. Let's close this. Don't need that. I don't really know. I'll look into it. I can fix this. Alright, if we look here, yeah, sure. Let me just quickly outline this. So we got this double bottom here, which means liquidity resting below, and this is like literally right above this price level. So we have, from a logic point of view, there's like many reasons why this trade makes sense in it. So if we go back to the 4 hour for you, okay, where are we? Here. Let me just remove this. Okay, this is the inefficiency here. You see that? Yeah? Just I'm gonna here, right here. That makes sense. So obviously I'll look for this to yeah, so we got those, let's go back to the 10 minute. So we've got these equal lows resting below here, which I want to see price take out. The only thing missing from this whole setup is, I mean, I usually look at my volume going into the setup, but let me just, we've got diminishing bearish volume and price decreasing. So actually we have some form of volume confluence. So look here, right? It's how volume's decreasing, right? Whilst we have a bearish price leg here. This doesn't make sense because if we're having a a bearish downtrend, bullish volume should be increasing. Does that make sense? So if for example, if we have increase in an increase in price leg, we should have increase in bullish volume to show that this move is supported through volume. So as prices going up, volume in buyers are going up. So this doesn't make sense, and it shows like price instability. And leading up to this fulfillment, I just want to see continuous decrease in bearish volume to indicate like price instability and a reversal. So we kind of have divergence here. This is called divergence when volume is like unstable. So let's just remove this. Sorry if you can hear my family screaming in the house now. What else? Yeah, this is the only thing that is missing from this setup, which is momentum. So from our when you measure momentum, it's not from the bottom of the swing, it's from your POI. So our POI is this inefficiency, right? So from the inefficiency to the top of the range is 75 bars. We haven't completed, I mean, we don't really know if we've completed the retracement, but the retracement so far is only taking 57 bars. So, oh my God, hold on. Anyways, what is this? Got someone in the chat. Less volume, yeah. Yeah. So what I want to see leading up to this trade is kind of a sluggish price action like this, just some more consolidation, and then bang, a dive, because we got equal lows here with momentum. I just want to see a dive and then bang, straight back up. And the thing is, so normally I'd say wait for a break of structure, but in this case, simply because from here, if you take the trade to the bottom of the inefficiency, it will literally give you a 2.5 pip stop loss. So, I mean, the reason we do break of structure is A, to confirm our market direction, and B, is to get a more precise entry, because usually our POI box is quite big. It'll be around like 7, 8 pips, like 10 pips. And then waiting for the break of structure, we can like minimize that. But let's just have this up here. You should be comfortable taking the trade. 2.5 pips drawdown. I mean, if I actually take this, I'll probably give it some leeway and make this like 3 pips. Leave this here. And literally up to this point here, where we take out external range liquidity, we'll bag 11%, take off half of the position, and remember to do your 10 pip rule. So get in with 2 trades. Again, this up here, 3 pips, and then this down here, 10 pips. So you're gonna bag 3% with without even accounting for anything of your other setup. So this 10%, this 10 pips thing will basically help you in the long run, because all these small 3% will add up at the end of the month. Like you 3% per trade, like you calculate how many trades you're gonna take per week. At the end of the month, you're gonna bag at least like 20%, and just you can just treat that like tips. It just and the reason why it's 10 pips here, because sometimes when you take a trade, right, what I've seen is that like sometimes, let's say from your POI, it'll go like 10 or more than 10 pips, sometimes like 20, 30 pips, and then bang, it'll drop against you. But by doing your 10 pips, you're kind of like guaranteeing yourself some form of profit. So it's just a good way to like solidify something, some form of a profit. Let me just delete this. Besides that, as I said, we do have this like inefficiency and stuff down here, but I don't really see price. Who the hell is screaming outside? Oh, um, I don't really see this retracing this low. This is a bit of a, this is too much of a deep retracement for my liking. Uh, let's go to GBP JPY. I didn't look at this pair all week because this was really stupid. It literally did nothing the whole. I mean, when was the start of the week? It's currently Saturday, so uh, yeah, this was literally consolidating the whole week, and this was literally like a what? Uh, Literally within 100 pip range, just up and down, no opportunity, nothing, and then it just boom, spiked. All this liquidity resting below here, and then just for it to come back up, and then retrace back down. Now, let's look into the past and see what this could have probably mitigated. So we're clearly on a nice like uptrend from here until we come down and break this here, which is like around 100, 300 pips away. I wouldn't really look to. I mean, this is some strong bearish momentum. I'm looking for some form of retracement, to be honest. But we came up, we filled this inefficiency here clearly. Let's see if we can go down if we see anything better. Okay, we do have a wick there, which is quite annoying, but on some other brokers we might not see that. Okay, we have lower inefficiency here. Again, we got a wick. Uh, Nothing much there. Wow. I mean, I'm kind of liking this inefficiency fill here, but we did come, no, we didn't really close above below the candle, so I think we're good for that. Um, how many pips is this? Give me a second. 19 pips. I mean, could have had a better POI, but again, I wasn't really looking at this. In terms of a retracement, this is quite messy down here. I wouldn't really look to take anything. Uh, Alright, we do have an inefficiency here, up here. 45, which sort of lines up with the top of this this SC here. So this could be a potential region where we could look to take this trade. So obviously this is where our POI obviously was like at some point here. We got the open of an SC, which lines up with this inefficiency. So we could probably look to take this next week, depending on how we obviously arrive at this POI. Yeah, even this 5 minute inefficiency, literally within here. Just to mark this out for you guys, literally within here. Again, lines up. Oh, lines up perfectly. I mean, to be honest, we did break structure here, but I wouldn't really look to take this on Monday just because on Mondays we kind of have we kind of see price doing this. It'll come, it'll break structure, then break structure again, then to the upside, then to the downside, with like no clear direction. Like you have a BOS here, but then a BOS here, and then BOS here, and BOS here. So like this is normally the kind of price action you tend to see on Mondays. It's kind of why I don't like trading Mondays, and more so at the end of the week. Tuesdays alright, but more so Wednesday, Thursday, Friday I like to take my positions. Mm. And that's obviously we don't have that, or I've waited like a long time for this setup or something along those lines. In terms of momentum, really looks like it's on our side. Let's just go from here to the top, which is what, 128 bars, and then from the top to here, it's like 244. So like literally double effort, clearly to the downside. Just look at volume, see if we find anything. Okay. Go to 20. I mean, this is some form of like increase in bearish volume, like in general, but we'll see how price reacts here. If you have a nice reaction, we could and a nice BOS, we could look to take this. See, look here, this is an 8 pip stop loss, right? So I wouldn't really want to take that, and I'd rather wait for a BOS. So I'd rather price tap and then let me get rid of this. I'd rather see something along these lines. I'd rather come like this, tap, boom, come up, break this structure over here, wait for retracement, have some inefficiency or an SC or something, line that up, and then literally just take the trade. That's what I'd like to see from this, to be honest. But if I'm honest with you guys, I don't really want to take this just because of this like higher time frame bearish momentum, and GJ, especially GBP pairs have been quite wild recently. I do like GBP USD though. Let's take a look at that. See what we got here. See what we got on our hands. See this downside momentums. Actually, you know what? We actually had a setup here. Let me run you guys through this. All right, so we had a if you can see this, we had an inefficiency here, right? Price came and we tapped it. So let's I actually forgot where this is, so I'm gonna try to do this with you guys. Let's zoom back here. Let's go down to let's pop down to the hourly. Let's see what we find. Alright, this is pretty messy. Don't really have any understanding of what the hell's going on there. So let's go down to the 15. By the way, I never do my top-down analysis like this. Never go to the hour, then to the 15 and like jump through. Always go one by one, but for the sake of the saving time and like obviously my computer's almost dying, I'm just gonna save us some time here. Alright, well, you can clearly see what setup this was. Sponsored candle. 3 minute. Come on, 2 minute. Alright, boom. So what we had was this. You know what? I might add this to the if you guys want me to add this chart up to the what's it called? To the chart breakdowns, I'll provide a nice explanation to this setup. So this was our higher time frame point of interest, which was the inefficiency fill. right? So price tapped it and it came back down. Sorry, price tapped this and then we came up, and when we moved back down, we mitigate out something within this candle, and we left a nice sponsored candle. Look at this, this bearish candle, and then boom, up, right? So this is our sponsored candle. Now we know that this candle here represents a high net worth market participant that's like added orders in this region. So what you do is mark it out, and for our confluence, let's see if we had a BOS here, boom. I mean, that is a break of structure. We didn't have candle closures, but let's go into the 1 minute, see if that was a bit more sluggish. See, oh, this is annoying. This is super laggy. I mean, I would consider this no cooperation, but like, I guess you could consider this a BOS as well. Yeah. Anyways, what we saw was price created equal lows here, formed liquidity below this level, right where our SC candle was, and our SC region was also lined up with this inefficiency within here. So we got like time frame confluence, and what we saw was literally a perfect run. Purge that liquidity. So in this case, you would have had a nice, what is this? Let's put this below here, 9 pip stop, which isn't really the best, stop loss you can get, but for the sake of this setup, let's just let's see how long this ran. God. Yeah, this didn't really actually wait, just did 200 pips. So it would have been a nice 1 to 25. I mean, a better, I feel like at some point within here you would have had a nicer entry and a better risk to reward ratio. But what I'd kind of look for this week would be, right, this candle clearly came down and purged liquidity below here. Let me make this bigger for you guys. So we obviously came down, purged liquidity below here, and ran to the upside. So if we go to the 3 hour and see what we see. 2 hour, nothing much. 1 hour, 45. Oh, hold on. Oh, wait a minute. It's back to the hourly. Yeah, perfect. Look, inefficiency fill. Whilst also taking out equal lows here. See, this is like the NZD CHF setup that we're looking for. Looking to take out that liquidity. Oh, are you guys talking in the chat? I think I've missed something. Chat. There is another inefficiency and more discount price. Oh, that was like 10 minutes ago. Sorry, Christos. What setup was that? Guys, since just us guys, you can unmute your mics. It doesn't really it won't really matter. Plus, I think it doesn't record. I think the recording doesn't pick up your guys' voice, so it's fine. Yeah, let me just run through this and then we'll pop back to that, yeah. So obviously we came here, we mitigated this inefficiency. So this kind of looked like a sponsored candle from the higher time frame. So let's trot down to our lower time frames and see if we can identify anything. See that it's starting to break up now. 10. That was quite messy. I don't really see much. 5, 4. Oh, we've got 10 minutes left of the call. Let's go to the 40 quick. Damn, I need to find a way to make this less laggy because this can't run. What was it, the 45? Alright, cool. This is kind of what I'd like. Obviously, this candle here is potentially our SC, but there's kind of too much. There's too much wick for my liking, but we did have a nice reaction away to the upside. Broke this level of structure up here. At first, we only like purged it, but then obviously we had candle closures up here, so I consider this upside corporation. But what I like here is the fact that this inefficiency here lines up with the open of this SC. Now, if this is a sponsored candle, it's fine that we don't have the rest of the body because we're not really measuring out the 50, but the open remains the same no matter how much body we have. So this looks pretty good in my opinion. How far are we from this? 11 pips. I mean, to be honest, depending on market gap, we'll see whether or not this works out. I mean, we could gap further up here and then work our way down, purge and run. So over the weekend, we might actually open up here, start being weird like during Monday morning, and then just bang, hit this and run. I don't really see anything else we could potentially come get within this whole region here. Sorry, this whole region here. Besides that, let me quickly go over GJ as well. Yeah, what potential short were you looking at? Because, as I said, I don't really like longing against this. We do have an inefficiency here. Could look to get that. See, that looks quite probable. If we do mitigate this, yeah, we could potentially come up here, right? Fill this inefficiency here. This is what you're looking at. I've had 15-minute. Yeah, same one, right? This one here. Or was it this one here? Was it within this, or was it up here? This one. Yeah. Mm, yeah. Wait, so we got one up here as well. Um, let's see how this both looks as we move across time frames. I do like both of them to be honest, but this one kind of lines up with this previous structure here, which we could just nicely reject off of. The only reason in this setup why I'd probably go for this one, yeah, is because if we do continue our downtrend bias, yeah, we might look to purge these triple equal highs, which is literally unheard of. I mean, not unheard of, I mean, it's quite rare. We could look to purge these triple equal highs, yeah, literally just, I mean, how many pips is this? It's like 80. Damn, wait, what? Got that wrong. 200. Yeah, see, I look for that, purge those highs, and then just die. Because, I mean, realistically, if we purge them and we just come all the way up here, that's a bit of a deep retracement in my opinion. But you need to remember, anything's possible. It's just to do with your bias. And to be honest, what I'd look for in both cases would be a break of structure. Like, go to the lower time frame, identify a break of structure, see if you have a nice reaction. And by the way, in terms of reactions, I'm back testing reactions myself, and there's a few concepts I'm coming up with. Sometimes what I normally see is like a how would you say we've got 4 minutes. It's like basically, let's say this line's our POI, yeah, price will come up and it'll literally just like it'll bounce off in a way, like a literally a reaction. It'll just come and then boom, it'll just bounce away from it, and that it's kind of hard to describe. This is why I'm like trying to backtest it, like make more sense of it. But that little motion there is kind of an indication of like um if someone if there's like orders that have been mitigated. So what they do is like these big banks and institutions and these hedge funds, they don't market execute like we do. They add order limits, right? So it would make sense that when price comes up to that order limit, it's triggered and it just bounces away from it. Because these orders are so big, it will add like pressure to like the downside, for example. And it makes sense that price comes up and it just bounces back. So then this is the kind of something you look for. Obviously, as I said, don't I mean I'm gonna backtest this myself, and you guys will learn about this. But by the end of October, I feel like I'll have a good understanding of it. Then you just wait for price to come back up. Obviously, this is your break of structure, for example, and then boom, take this down. And even in this case up here, just wait for price to come up, right? Break of structure, boom, and then come up to your POI, then take this down. Yeah, besides that, I'll keep you guys posted on all these setups in the has anyone joined? Nah. I'll keep you guys posted on let me stop recording actually.